Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Monday, May 15th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. We're all back in our respective seats this week. Going to be a good one on tap today. We do have some interesting ratings from this morning. Tesla getting downgraded. It was one of the big ones, but I saw a few that jumped out to me, so we'll get through the ratings. We'll get through. We're in retail earnings season now, so we're going to talk about that as well with our first guest, who are on the guest, is Ryan Craver. He's a retail expert. He's the SVP of Emerging Brands at the Lamore Group, a retail licensor. I actually met with Ryan in New York for about an hour and a half on Friday. Really cool to finally meet him in person. So we'll get through those. We'll get through our 13 Fs. We'll talk about the Benzinga FinTech Awards last week. But Joel, how are we doing in the S&Ps right now?
S&Ps are looking pretty good. Spencer up 275. We held the close. Climbing into the 2390 handle. 9450 is your high. Just knocking on the door. Get over 2400 once again. Crude up on some more jawboning here by OPEC in Russia. They're going to cut supplies now by 2018. Whoopee. When we just made a high at 49.45. That, of course, that psychological $50 level may come into play today. A couple highs just over 50. And let's see, we got gold's up 620. That's getting off the 1200 level, not quite to 1250. Silver getting back up there towards 17, up 33 cents at 16.74. I would say let's bring in Triple D, but I think we got to call him Quad D now. We got an addition. We got an addition to the family. Quad D. Yeah. Congratulations. How are things? Is it a totally fast market over there, or what's going on?
Yeah, like you were saying, I'm in a permanent fast market here now. I thought I was busy before. Now I'm busy with the second kid. I got the 2.5-year-old running around and the 5-day-old not quite running around, but she's at least sounding. She's hollering a little bit. So no, it's good. Everything went well. I took last week off. Had my second child. Wife gave birth on Tuesday to Natalie, and she's doing well. Everybody's doing good. So it's busy though. It's a busy life when you get kids, markets, cats, dogs, everything going on here.
Do you have a dog?
No, I don't have a dog.
Okay. Well,
I have a cat though.
Well,
cat doesn't do much. So cat's easy. If I had a dog, I'd be like, I don't even know what I'd do.
All right, so
cat's easy though. Takes care of itself.
This just confirms now that you are going to have to get a futures account because you are going to be up at all hours of the night now. And the stocks
I might as well. You're right. I already am. I don't even sleep anymore. I'm like Donald Trump. I only sleep 4 hours a day, just periodically.
All right.
Just little cat naps. Like 20 minutes here, 20 minutes there.
All right.
You can.
Well, we'll be, Lisa and I will be over there soon to see Natalie Evelyn, right?
You got her.
Okay. I made three name suggestions: Josephine, Joletta, and what was the third one? I can't remember. Jolene, Josephine, and Joletta. He did not even take any of those. They
were considered.
Oh, they were considered. Okay. Well, Dennis, I don't know if you missed a whole lot in the markets last week.
Just go straight up.
Yeah. Yep. You did manage.
I won my bet, though.
You did.
Another bet one. Just bet on the bull side. It seems to always work.
Yeah.
That's how I'm getting you, Joel. You take the bearish bets. You'll realize this trend eventually.
Yeah, and then that will be time to switch.
Yeah, definitely. Incredible market, though. It just keeps going up here. But let's sum up the FinTech Awards here, too, because you guys were busy in New York, Spencer, and I want to hear what happened in New York. Then we'll jump into these markets.
Yeah. I was in New York for 3 days. It was a great time. Event was last Thursday. A lot of cool things happening there. So we had Kevin O'Leary from Shark Tank who came on stage and talked about his new ETFs, and then the idea was we would have a little Q&A session right with the crowd, with the audience, and this is your chance. You get 10 seconds, pitch him your idea. There was like 100 startups at the conference. You would think people would be wanting to pitch him, but I think everybody was too scared. We only had one person, one woman actually stood up and pitched him her company, and he said he liked it. So and they were actually that company was
What do they do?
I'm trying to remember the name now, but they're a platform that allows employers to help their employees pay off their student loans. It's called Future Fuel. Future Fuel, and yeah, it's called Future Fuel, and and he said he liked it. It's sort of a way to help employers, help their employees pay down their debt. And that they were one of the stars of the show, partly because of that pitch. I would say they also won an award. Unison, another star of the show. That Unison's interesting. If you haven't heard of them, they offer if you're trying to buy a house, they offer they will buy some equity in your house that they then keep as the house appreciates in value, and then when you sell, they get some they get something to pay off. But it's just another way to finance.
So they're helping people who can't do the mortgage on their own.
Yep.
Is that kind of the idea?
Yep. And a lot of really interesting people. Saw Andy Swan. I mentioned I met with Ryan Craver on Friday. He'll be on the show in about 20 minutes. I met with Mark Chaikin. I met with a lot of people. Josh Brown was there, emceeing as usual. I met with Redler. Scott Redler, on Wednesday. We had lunch. We had lunch. Yeah, I didn't get to go.
Me and Joel didn't get a lunch off, Redler.
I didn't get to go to the office. So.
Oh, you didn't get to see the studio there.
No, I didn't get to see the studio. I didn't get to go to the office. I got a lunch with him. And then I saw some of his guys from T3 at the event. But it was a really, really great event. A lot of fun. Went from around 11 to around 9:30 from start to finish, and really, really great. We're gonna be having it again. Obviously, we're having it again next year. It was a great success, and I hope people that were there got some value. I hope they were able to, maybe make some connections, maybe get some funding. I will say that we had like 6 panels throughout the day. The venture capital panel was my favorite. That was one that had Gene Munster on it. I had two other VCs, David Tetton, and then Steve Lau from WorldQuant, and that panel lasted like a half hour. It was a really, really good panel. Gene was on point, and the room was enthralled by that one. So that was my personal favorite. But it really,
Gene's always good.
Really, really, really great event. Yeah.
Any good after hours stories?
Actually, no.
Nick didn't lose his wallet?
Nick didn't lose. Nick wasn't there to lose his wallet. No, there was nothing. No, nothing really good. I mean, I'm not sure Jason slept on because he had to go on CNBC the next day.
I missed it.
We all missed it. No one saw it. We were all sleeping. So nobody actually saw him on TV, but he went on CNBC. He went up Squawk at like 6 in the morning. So I don't think he actually slept.
Wow.
But yeah, no, it was good. Thanks to my Fitbit, I know that I walked 11 miles on Thursday in dress shoes. But yes, it was a good time. A good time was had by all.
Can I do one Fitbit update?
Sure.
Lisa got one from Dana for Mother's Day,
sure.
And I just kind of said out of the tongue in cheek that I hear they're not working real well, and she got it a couple days ago. She gave it to her before.
Sure.
It's not holding its charge.
Oh.
Are you familiar with that at all?
Mine lasts a week.
Is that the Fitbit charge?
Yeah. So I don't know.
I don't know.
That's the name of one of their products, so that's why.
Yeah, they have a few different ones. All right.
Cyber attack. Is that affecting anything in the markets today?
Yeah, obviously the market's going up because of that. And the markets go up because of everything. We have a nuclear war and the market would be up tomorrow. It's crazy. The market just goes up no matter what. But yeah, tell us about that. So over the weekend here, Spencer, we had a cyber attack on everyone? What was this deal? What's this cyber attack?
It was called, the ransomware was called a WannaCry, and it struck about 200,000 people in at least 150 countries, believed to have been stolen from the NSA, which is always reassuring. Microsoft, Hack, FireEye, Cyber, Cisco, PANW. Those are your major players here. Microsoft actually blamed the government for not disclosing more vulnerabilities in their software, but that's the gist of it. So last I read, they're still working to figure out who exactly was behind this.
We know who was behind it. the companies that create the software. You didn't listen to Bazinga's pre-market prep on
Is that what
Friday?
they're saying?
No.
Is
Kenny
that what we're
Glick
saying?
said
No.
that the
Oh, no.
reason that he doesn't buy cybersecurity companies is because they're the one that create the viruses.
Oh, no.
So they can,
There is obviously people that suspect that, and it's a bit of a joke, but I don't know. Like you do see, if you were a virus company, you need viruses out there, so it wouldn't surprise me actually.
all right, we got to get to the markets here. 10
Conspiracy
minutes.
theory. Let's talk just those cyber stocks just for a second though, because they're all trading up here this morning. So FireEye is trading up 5.5% here this morning. FEYE, that is a breakout for FireEye. CyberArk SCYBR is bouncing back. Had a rough day on Friday, but bouncing back here this morning. And if you want to see Hack, which is HACK, that is an ETF that tracks all
Whoa.
these things, and it's trading up 6% here as well. Great ticker symbol. We still haven't done our great ticker symbol show, but HACK is a good one there too. You can see trading up here, very illiquid though, so I'll just say it's $1 wide here this morning. But let's jump to the FireEye because it's more liquid. It's got a 1 penny spread here at 8:11 in the morning. Thank your high frequency trading market makers, maybe. Anyways, up over $15. $15 breakout here, Joel. $15.60 here this morning for FireEye.
Yeah, for those waiting for the gap fill like me, just forget about it. Cancel your GTC order down there at $12.75. Let's see where the print. You got a high print at $15.68 for FireEye. I think they had a good earnings report too. I mean, I'm not going to go through all the individual numbers in this, but if anybody's trading these, just look at that pre-market high and that opening print. If these things are going to just, if it's just going to be a great day, they're just going to keep barreling. They're going to take out that opening print, and I'd even say clearing a whole number. Besides that, to kind of sell the news kind of thing. But keep an eye on the pre-market high as well as those opening prints, and if you can always find a daily high or something to coincide with that, that would help as well.
These events are typically a one and done, so it's caution on the person that's trading it. That being said, I kind of like this FireEye chart. So if I'm looking at them, CyberArk, I don't like that chart at all. Had the awful day there Friday. I don't know what happened because I wasn't here, but I can see from the chart it got hit pretty hard. Yeah, so now you get a pop back in CyberArk. That's the one that I'd be more prone to maybe try a short position on, as opposed to FireEye, which is breaking out. So maybe put the FireEye, long FireEye, short CyberArk's pair on. Maybe that could work. But in any regard here, I like the breakout in FireEye, but CyberArk, the bounce back, I think 50 you might struggle at. If you even look at Friday's high on CYBR 50.13, that could be an area of resistance there. So I'm sticking, I like FireEye on the breakout. I don't like the CyberArk chart though.
PANW, Palo Alto Networks.
Another one, yeah.
Yep, that just hit 120, hanging out here at 119.55. I know this stock got hit. Earnings ago, that 120 is huge. Gap down
huge
day.
Number.
Yep, gap down day. You had a high at 120 and change. Where was that high on this one? 120.69. You kissed 120 a few times. So big old gap up to 150. Obviously won't fill it in one day, but just be aware of the
may not fill it at all.
Yeah, void in price in PANW.
Yeah, so those stocks are obviously moving there, and I still am cautious just because when you hear something like this, you always see them get bid up the next day, and a lot of times there isn't follow through there. But still, like in the FireEye chart, because it does look like a breakout there after a long consolidation period. Just jumping over here to a couple other stocks that are in the news here this morning before we jump into earnings. PTHN, Patheon, getting acquired here this morning. So we have a merger. We got Thermo Fisher, TMO, buying PTHN. Spencer, do you have the details on this merger?
$35 per share is the takeout price.
Cash. It's cash?
Yes, cash.
Cash. So PTHN, we know where that is. 30 cents the risk arbs are putting on there from $26 to $34.70. So congratulations if you're long PTHN. There's your windfall. Thermo Fisher, Joel, TMO. It's a stock that's been on a little bit of a tear here in the last month, going from about 155 just a month ago up to over 171. Has not traded here this morning. Sometimes they hit the acquirer. Sometimes they buy the acquirer. We haven't seen anything here this morning. I can tell you the spread is just ridiculous. So it's $166.50. Up to $32,227.83. So there's no offers. There's basically no offers in the book here right now. It's very early, though. I can tell you right now it's not going to open at $32,227. So there's going to be some offers that come in here, but we have no pre-market action here yet.
173.21. That is your all-time high. That was hit last week on Tuesday. I keep an eye on that. Now, if you break below 170 here, I see a couple lows just below that. But really, it's been a toss-up on whether or not the acquirer goes down. So it's just not a rule of thumb like it used to be. But keep an eye on THMO. Seems to be your mover or will be your leader on this one. And
TMO, yeah.
and I'm looking here, and I know I'm not going to ask you, Dennis, because you get mad, but I'm not going to ask you what they do, but this is THN. I mean, they're what? Computers? What the heck do these companies do?
Well, this is Thermo Fisher. It's let's get the actual details here. Spencer, you have it in front of you?
THN you're talking about?
No, the Thermo Fisher. What exactly does Thermo Fisher do?
Yeah.
We know what industry they're in, but what exactly is Thermo Fisher?
Thermometers?
No, it's not
here. Hold on a second. Let me pull it up on my
Joel,
Pro.
I'm not gonna throw you under the bus. We'll throw you all under the bus here.
They do.
We're traders. We don't care what things do.
Let me just read you. This is.
Read us the company description.
This is vague. Okay, so they're a medical equipment company.
Okay.
Yeah.
So medical equipment, things for research, diagnostics, lab products, that sort of thing.
Okay.
Instruments, not guitars, but
Appaloosa took a stake in Thermo Fisher on May 12th, so he must be Appaloosa must be pretty happy on that one.
Speaking of, let's talk 13Fs because there was a few that came out on Friday there, Spencer. Do you have some highlights there for us?
Yeah, I got some highlights. So we'll go into Appaloosa. So just reading off of the Appaloosa filing, they lowered their stake in Apple. They raised their stake in Yahoo. They liquidated their whole position in Qualcomm. Appaloosa did. They raised their stake in Micron, raised their stake in United Airlines, raised their stake in Southwest Airlines, showed a new stake in GM, reduced their stake in Goodyear, and raised their stake in U.S. Steel. Those are the big ones there for Appaloosa. Third Point added to their stake in Alcoa, liquidated their whole position in Apple. They raised their stake a little bit in Alphabet and Anthem. Third Point also shows a new stake in Snap. They cut their stake in Facebook. Those are the big ones there for Third Point. There was a few others, but those are the most of the ones that jumped out to me. They lowered their stake in Dow Chemical as well. And then Starboard Value took a new position in Colgate, and they raised their stake in Baxter and Cognizant. Last one I'm seeing really here is BlackRock took a new stake in Snap.
Nothing from Warren yet, though, huh?
Nothing. Nope.
I mean, if you had to look for a prevailing theme here, a couple of the big boys dumped Apple. And I don't know if I could recommend.
I dump my Apple too. Am I one of the big boys?
Yeah, I guess I was thinking about that.
I dumped too soon. I don't take it through the earnings.
I don't know.
I was great for one day. When it pulled back $3, and now it's straight up.
Yeah, it's
never sell. Isn't that the theme of this whole market?
Yes, buy on the open and then buy more on the close.
Unless it's like Ford or anything like.
Apple ripped on a Bank of America price raise on Friday, so that was opened higher and never looked back. New all-time high at 146. It went off the board at 146.42, and that was just off the high of the session. So I don't know. I don't know if it's time to sell this yet.
It's just off to the. I mean, everybody hated this stock, and this just shows you this market. We say it all the time. When you're fading the masses, you seem to make money. Everyone hated the stock in the 90s. You had everybody seem to say, Apple can't get it together. It's way off its all-time highs. And since all the commentary back in the summer of 2016, stock has just quietly went up 60%. The biggest company in the world has had its best run maybe ever. Or maybe not ever, but in years. We haven't seen Apple have a 60% run in 7 months in years, Joel. You think about how hard it is for a market cap of that size to go up. That's how impressive this Apple run really is, because it's not like it's a market cap of 50 billion or 100 billion. We're talking about a company, that's the biggest market cap in the world. What is the market cap on Apple now? Is it approaching 800 billion yet?
No, it passed it. Market cap is 825.
Over 800 billion.
825. Yep.
That's incredible. It's going to be, it's trying to become your first $1 trillion company. Now, I don't know if it's going to do it, but man, it's such a rise now. I feel like you're totally chasing it now if you're buying it up here at 156.40. But
Do you want a
um,
target? You want a good target on this
yeah,
one?
a
Okay.
target.
You look at that run in early 13. Let's just call it $60, and you got over 130. You had a 70-point run. If you had that 70-point run to 90, you're looking at 160 and change, 160, 162. So there's
Do
a
that next week the way it's going.
do it today the way
Do
it's
it
going.
today. I mean, this market is, pretty incredible here. Every time you try to fade it. For 8 years. I mean, we really are talking here since the financial crisis when everybody threw away everything at ridiculously low prices back in 2008, 2009. We have been straight up ever since. There has not been a significant pullback. Like, when is the last time we had a 20% correction? Like a bear, they say an official bear market, 20%. When is the last time that happened on the S&P?
Well,
It's
I
got to
don't.
be years now.
Oh,
Like, we were fighting to have a 10% where they say, officially when the market pulls back 10% from the highs, it's a correction. When it pulls back 20%, they call it a bear market. When's the last time we had a bear market in the S&Ps? Have we had one in the last 7 years?
That one night of the election. That was about it.
No, that was just a correct. Was that 20%?
I,
Or was it
I don't
10?
think it was. We went
I think
from.
like 10%.
Yeah, it wasn't.
It's
No.
been an incredible one-way market. I mean, it has been difficult, and you have ruined shorts all the way up. People, saying, okay, valuations getting ridiculous on certain stocks. I mean, from a perspective of long-term investing, the market is starting to get a little more expensive. But it was just so cheap in 2008, 2009 that it took, a long, long run to get itself up to normal levels. And now we're starting to overshoot a bit. But we know these things can get crazy. I mean, back in the tech bubble, the S&P, I don't know what the PE of the overall S&P was then, but I think it was upwards of over in the 30s or higher 30s maybe. And I don't know where we are now, but lower 20s I think we are. So bubbles, you can say, but long run, we're 18, 19 usually on the S&P from a multiple
Right.
perspective. When you trade 22, you're not ridiculously
Nope.
overvalued. You're a little bit, higher than norm, but it's not like crazy ridiculous overvalued. And a stock like Apple, I was trading with a PE when I was in the 90s of about 9 or 10. And people say, well, there's no growth, so it deserves that. Well, they're finding a reason to buy it here now. So, when the tide turns and people start coming into stocks, they come in with two hands, and when they don't pull back easily, this Apple's been relentless here for the better part of the entire year of 2017.
All right. One stock, and I don't know if you checked out the earnings report, but one stock that dipped under $5 Friday, Dennis. J.C. Penney. Holy! Did you see this thing on Friday at all? Or you?
No, but I did see that they had the poorest earnings report, poor same store sales there, and stock getting murdered. I mean, this story has been over for a long time. It's had some short squeezes, but really think about J.C. Penney. How we've been dogging this forever, but it's had some short squeezes in there too. But now it's under $5. I mean, you're coming in here thinking J.C. Penney, is that really where you want to put your money? Is J.C. Penney? There's a lot of better retailers out there than J.C. Penney.
And also now under $5. What institutions were still in it? It's not a hard set rule, but they may be contemplating getting out of this thing, and some of the margin requirements change at brokerage firms once stocks get under the $5 level. So it did go down to four. I was looking on the monthly charts. 2014, we did get to 490. But we ended up closing at 508 on the day, and so it closed above that level, and made a couple runs into double digits over the last few years. But now you're well under. You're well under that $5 here. So I don't know. I think they beat on the EPS, but they came up short on revenues. And boy, oh boy, these retail stocks has been a familiar theme.
Yeah, it's ugly. And five is always significant because a lot of brokers, that's where your stocks become marginable, is when they're over five. So when they start falling under five, that's where they're not marginable anymore at a lot of brokers. And that's why you can see, it cascade sometimes when they fall through five. So, it's significant, it's psychological, and there's relevance to it from the marginal perspective as well. The high on Friday, $5 on the kisser. I think this continues to leak here, honestly. This is my opinion. And you've got analysts ganging up on it here this morning. You got Baird downgrading it, Deutsche Bank downgrading it, Buckingham downgrading it. I mean, the J.C. Penney story has been over for a long time. It's just things just don't go straight to zero. Not saying this is a zero, but the charts don't say really otherwise.
441. That is your pre-market low, getting a little bounce at 450. We'll see. I mean, that close, I went all the way back to 98 looking on the charts. That's an all-time closing low there at 455. So just keep an eye on that number, as well as Friday's high at 5 even.
Just a couple of, we just said J.C. Penney with the downgrades, but there was some other significant analyst moves here too, and let's just highlight them for you. The big one, Tesla, getting downgraded here this morning at Morgan Stanley. I think going from overweight to equal weight. Is that what they were doing, Spencer?
Let me confirm.
Sounds like a valuation call.
Yup, it's exactly exactly what you just said. Overweight to equal weight.
Stock pulling back. We're into a little bit of trouble. We always see these big whole psychological numbers. Well, 327, and then you can go again 327. I guess that's not psych level, but 327, three highs in the same area. Now you're pulling back. Now you're below 320 here. That's where your resistance point is. You can say, I'm looking at it here. There's a little bit of a reverse head and shoulders kind of forming there. But you want to see it get back up over 320 and hold that. That being said, it seems like every time this thing pulls back, it just finds buyers. So I'm not short in Tesla.
This guy's good. Adam Jones is very good. He made the call when the stock was at $180, $200. He did call for it. I think he had a target in this area. I did see him on CNBC last week or the week before, and he said, yeah.
So he's ringing the register.
Yeah, he said he thought it was going there, but he thought it was like a year and a half, 2 years. He said he thought it was too much.
Not 6 months.
Yeah, too much, too fast here. So, like you said, not running out shortness for people looking at a long or either cover is short. You got a pre-market low at 315.10. You're getting a little bit of a bounce above that level. Nice level if you want to hold out a little bit longer. Your 4-day low is at 309.10. So maybe 310 is psychological level unless they try and just scoop this thing right up off the open. Fill the gap from Friday. You got a little ways to go. You need to get up to 321.53. It could certainly do that the way this thing moves.
They're taking their money, Morgan Stanley, from Tesla and putting it in Cisco here this morning because they are upgrading Cisco to overweight. Stock is trading up Cisco significantly here this morning. It's a big move for CSCO, up 1.7%, trading over the $34 level here this morning. You do have that major resistance point coming up, though. I will say 34.60 is where you got back to on the 8th, and if you want to go back, there's 34.51, 34.53, 34.48, all through March. So all kinds of resistance up there in the 34.5 area. That's going to be the level that I'm looking at today. If it gets overdone, I think the first time up there, maybe you find some major resistance up at 34.5.
B. Morris, I don't know if this is upgrades because of the hack. What I think is very interesting about this upgrade is it's coming into earnings, right? Doesn't it have earnings this week? So
Cisco has earnings on Wednesday.
Yeah.
Wednesday after the bell.
Yeah. So when I see this kind of analyst action here ahead of a report, man, also after you had how many down days in a row here did you have in Cisco?
5. Isn't there a rule in this market? Anything that goes down for 5 days is an automatic buying opportunity?
I think you're going to see. I think you'll see sellers in this one. I think you're trading at 34.02. Pre-market high is 34.20. I see a high just above that at 34.26. Let's see.
You're a little before me. I'm saying 34.5, but I'm on the same side as you on this one.
How about this doesn't close over $34?
No, I think I'm on the same side. Okay. I'm a fader of this rally at Cisco.
I just don't.
Although it's hard to fade anything on the short side, so I probably won't, just because I've been burned so much short in stocks in the last 8 years that I rarely. Well, I still do it a lot, but I usually get burned when I'm doing it. So, anyways, 34.5. I'm sticking with my original number. It gets up there to that level. I might try from the short side.
Okay, all right. You can.
Johnson & Johnson upgraded J.P. Morgan here this morning. That stock trading up over $1 here in the pre-market. That 125 is a big level here, though, Joel. I can even look in and I can see 80,000 shares setting up at 125 perched. So I think it struggles to get over 125. I mean, it is an upgrade. It is going to open into it. Maybe it's got the gas. It's a defensive stock, though. It's not the kind of stock that people have been buying here. So that's why I'm thinking the J&J 125 level. I think it might hold.
And earnings gap, you had 125 as low. Had been struggling at the 124 level, couple highs there, but I like that as well too. 125 fills the gap. Also an institutional seller there, and I don't what's with any volume trading. 1,600 shares.
1,600 shares,
Huh,
not much.
to get that up a buck 26. So
Well, it's worth a buck. I think an upgrade from JP Morgan is worth a buck. So I think they kind of got it priced fair. I just don't see it being able to just ease through the 125. I've been wrong. I mean, it could just blow through the 125. But even if you get up over 125, you have multiple highs in that 125 area, all from late March, early April. Plus, it's a defensive stock. And, you're up here again this morning. These aren't the kind of stocks that have just been rallying. Procter & Gamble's been leaking, not, saying Johnson & Johnson, Procter & Gamble. But, even the drug stocks have not performed that greatly. It's not the kind of stock that's breaking out here and everybody wants in. So when you see a pop of a buck and a half on something like this, I think it finds sellers too.
remember when this Procter and Gamble and I don't know who was getting involved with it, and it ran to 92, Dennis? Remember you had that gap up and go and just kept on going, and now you're right back down to 80.
Leaking.
Look at this 86.
Looking like it's like that one looks ugly on the chart to me, doesn't it? To you, like it's got a little, backward. You got a little 86 area there. 1, 2, 3, 4 lows in the same area. Imagine this takes out that low, and the low from the move here, recent low is 85.90. If this can take out 85 or 85.88, it can take out that 85.88. You start thinking about, this thing could see $84 again.
Yeah.
So
yep.
That's an ugly looking chart, especially in this market that's been going straight up. Again, they're not buying stocks like this. This is defensive, and these stocks are not the ones that are in favor right now. It's everything else that's risk. We always talk risk on, risk off. Procter & Gamble is a risk off stock. It does that actually better when the market starts to, underperform a bit. The market starts to show a little bit of weakness. And this is not a stock like Johnson & Johnson, same thing. It's not a stock that people are running into. When they're running into the Nvidia and they're running into, even Apple here right now, you can say, they're not running into stocks like Procter & Gamble, and they're not running into stocks like Johnson & Johnson. So it's all about that, environment and, understanding, how, money flows. And when it's risk on, money is flowing out of stocks like Procter & Gamble.
And did you take a look at your NVIDIA here? Hit 130.43. Yeah. 130.43 on Thursday. Came up just shy of that level on Friday. All-time closing high, 127.89. 130 gathering here. I mean, it's a psychological level. You have two highs in that same area. Not trying to call top here in the issue, but it has had made a high there the last 2 days. Actually stopped short of that on Friday at 129.60. So 130 being a nice level to keep an eye on. And AMD, Dennis, you said you were going to pick that up when I talked to you just after.
I wish I would. I was thinking in the 10s, picking up some AMD. Now it's in the 11s. I don't know if I'm going to get another shot at it. I shoulda. I coulda. Shoulda, coulda, woulda, I guess. Didn't do it. I was obviously busy a lot last week, but that $10 level in AMD was solid. Ace, I think, was shouting it out there too, so shout out to Ace. But AMD in the 10s, I like it in the 10s. I don't know, 1138's run a little bit too far here in the last few days for me, but it seems like the market where you're chasing, you're actually making money too.
In the chat from Jar Twilio, Kramer talked about it a little bit, I guess, on over the weekend. Says it's a decent buy. He believes the stock is now overly discounted after the loss of the Uber traffic. I mean, this is just an ugly-looking chart. I mean, I know the IPO price was quite a bit lower than this. I mean, if you're following Kramer here, you did get a pop up to 24.93. Right back. I mean, the thing you could say about this chart, at least, is if you're taking a stab at it here at 24 and change, 22.80, you kind of might want to be out there because that was the low of the move. Or if you just want to be patient and see if they test the low of the move, you could try picking it up at that level. I will also note when this thing IPO'd, the low was 23.66, so there's a good area. And Dennis, your Snap. What are you going to do with all the shares of Snap that you bought at 25?
Yeah, I don't like Snap. We know that. I didn't buy any shares. That's Joel's joke here. I'm not, interested in Snap. I think, it's a stock that, obviously it's come back a little bit from 2 days ago, even trying to fill the gap up here a little bit. 20, I think, psychological resistance here now. I think it's a big level here, but valuation is just way too much for me on Snap.
All right.
Not my kind of stock.
Before we go to our first guest, the Street. I had this targeted. The company came out 14.16. The Street targeted at 17.18. The low on Thursday, 17.59. So way to go, Wall Street analyst on that one. Spencer, we're going to talk some retail here at 8:35.
We got some retail at 8:35. Ryan Craver, retail expert, SVP of emerging brands and digital at the Lamore Group. He's going to tell us all about what he thinks this retailer earnings season. So we'll be right back with Mr. Craver. Welcome back to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Ryan Craver. He's a retail expert, the SVP of Digital and Emerging Brands at the Lamore Group in New York City. Ryan, how's it going today?
Fantastic. How you been?
Been good. Caught up with you last week after the FinTech Awards. It was nice to catch up in person. But we were talking a lot about retail earnings because that's the season. It's that time of year. It is retail earnings season. We were talking about JCPenney on Friday, and we were just talking about them a little bit before you came on the show. So let's talk about retail earnings. Q1 is underway. We're maybe halfway through. We got a couple more reporting later on this week, but let's just get your thoughts right off the bat with JCPenney, since we just talked about it on the show. What did you think of that report? Obviously, it was not good.
JCPenney looks like it's continuing to struggle. About a year and a half ago, they started going into bigger ticket items like appliances and home furniture, and they used that to fuel their comp sales growth. And it looks like that's kind of petered out, and they don't really have any other ideas for how they're going to grow the overall business. The one piece of the business that's doing fantastic for them is the Sephora shop-in-shop concepts that they've got, and they've obviously extended into more of those, and they plan to open more of those. But beyond that, I can't see anything I like longer term in JCPenney, and it's definitely one of the department stores I would avoid.
All right, let's talk about Kohl's, because comps were down about 3%. You mentioned in your note it was the fifth consecutive quarter, the negative comp, and second highest negative comp in general. So 90% of their stores, you say, are freestanding or in strip malls, which does provide them a little more flexibility. But talk about Kohl's for a second there.
Yeah, I think you hit the nail on the head on all those points. Fifth consecutive quarter of negative comps. I think on the bright side, they pointed out the recent Under Armour partnership that they've got. It sounds like it has exceeded their expectations. We know that Under Armour has had some struggles as of late. So I think that's one positive note. Beyond that, they pointed out some ability to roll out additional stores within their network to fulfill their online business. But the elephant in the room is asking them whether they're going to close any more stores. They currently believe that they have an adequate number of stores, and they also believe that the size of their stores makes a lot of sense. I do think the fact that they're not in malls is providing them some benefit. However, I still believe that given 5 quarters, 6 quarters of straight down comps, they're going to have to close additional stores. If this trend doesn't reverse itself, they will close additional stores. I don't want to sound like negative Nancy, but I also believe Kohl's is definitely not one of the department stores you want to play longer term.
Ryan, let's just talk Macy's and Nordstrom here as well. Obviously related to Kohl's here. These stocks are ugly too. I'm just looking at this Macy's chart, and I was off last week actually, and I come in here this week and I look, Macy's was up at $29. It's $23.70 here this morning. The dividend on Macy's is now 6.36%. I don't know if what they did last week, because obviously I was off and I wasn't following the news, but obviously it said something ugly. First of all, do you think the dividend is even safe? Like when you start getting up to 6.3% dividends, you start thinking, is that safe? Because obviously if it was safe, value investors would probably be licking their chops, and they don't appear to be licking their chops on Macy's.
Yeah, I mean, if you listen to the conference call, I think that provided more information than what was in the press release. They were down on an owned basis over 5%, which they haven't been down that much since Q1 of last year. They always talk about Q1 being terrible. It was probably worse than expected. I do think the dividend is in jeopardy. And then you had a management team who said we still stand behind our previous full year guidance, which was down 2 to 3% in comp sales. I think it's going to play itself out just like last year. They said the same thing in 2016 after the Q1 call. They never made up the ground they lost in Q1, and they were digging themselves out of a trench for the entire year. I can't see how the 100 stores that they announced roughly 3 quarters ago is enough to stem the bleeding. I think that, yes, they've got some positives in Blue Mercury, which is an acquisition they did, and they're rolling store-in concepts with Blue Mercury, similar to JCPenney with Sephora. That's one positive. And then they're just turning their current doors into off-price places, calling them backdoor. I really can't see how that dividend stays whole. Cash flow into the business is getting worse, as well as the sales are dropping 5% across 2 years. That's almost
right. Like I'm just looking, obviously the JCPenney story has been horrible here, but you start looking, at these Macy's charts and Kohl's charts, even Nordstrom, and they're obviously department stores. Like it almost feels like they're trying to go the same way of JCPenney.
I think you're right. I really do think you're right. The only different department store in my mind is Nordstrom. And the reason being is they have put so much money, effort, and additional stores into the off-price world, like TJX, Burlington, and Ross. Nordstrom Rack has 215 doors. They believe they're going to get up to 300, and they've also nailed the digital customer. 23% of what Nordstrom sold last quarter was online. If you're forced to play in the department store space, the only one that I think still picks up the middle class with their off-price, the lower class with their off-price, and then the upper class with their premium product through their Nordstrom full-line stores is Nordstrom. Everyone else looks like they're either going to close a heck of a lot more doors or sell out the space above and below the store, similar to how Macy's and Kohl's will likely do.
All right, we're talking retail with Ryan Craver. Ryan, on the chart here, you show the sales for Off Fifth Avenue, and boy, that's supposed to be a discounter. That doesn't look too good. Any comments on that?
Yeah, I think very, very spot on point. Everyone in off-price seems to be growing positive sales. You saw Nordstrom Rack just posted a positive. We've got TJX, Burlington, and Ross coming up, and they've had several consecutive quarters of positive growth. Saks Off Fifth is part of the whole Hudson's Bay company. You would think that they would be positive. They're traded on the TSX in Toronto. I think they've just grown too quick, too fast. If you look, they really have expanded faster than any other off-price player. They either have a merchandising strategy that's gone wrong, or they're picking the wrong locations. I believe it's probably the fact that they don't have the right merchandise in the stores, and therefore they're not bringing the traffic from the Nordstrom Racks and the TJXs and the Rosses and the Burlington over to them, and it's probably too high a price merchandise relative to where they should be.
All right, so some of the big stores aren't doing well. We're going to move into some of the discounters. We could talk about Five Below. I don't know if Larry's in the chat today. He's been loving that stock, but looks like Dollar General and some of the other lower price stores are, Burlington Northern or Burlington Coat Factory has always been good. Next up for earnings is the discount stores. Give us your take on those.
Big fan of the discount stores. The only word of caution I'd point out is that Nordstrom Rack, which is also an outlet or an off-price store, was a little bit lower than we had anticipated. We had hoped that they would post plus 3% year over year for the quarter. They did not. However, we've got the big players who 100% of their business is focused on off-price. TJX is our number one stock within that area. We're also big fans of Burlington as number two. Number three would be Ross. In the dollar world, it's really Five Below. Five Below is the number one holder for us. We're big fans of Five Below. The Dollar Generals, the Dollar Trees of the world, we believe that they may reach a saturation point at some probably within 2 years, just given the number of stores that they're rolling out. So big fans of Five Below and TJX.
What about Target? We're going to hear TGT earnings on Wednesday. We're actually going to hear Walmart on Thursday as well. Target, we know, got beat up last quarter. Stock gapping down, has not really come back since, significantly off its 52-week high. What's Ryan Craver's thoughts on TGT?
TGT still has that chic relative to Walmart. I think Walmart's gone out very loud and strong to say we're going to fight the e-commerce battle, and Target's kind of pulled back and said we're going to optimize our domestic business because we have no international business, and we'll make some changes to the .com, but we're not going to invest as heavily. That scares me longer term. Short term, I think Target's a good pick, just given how much it's received and where it's gotten to. But you can see they're not out to win e-commerce. They just increased their minimum threshold for free shipping online to 35, whereas Amazon has dropped it to 25. And I think they're going to struggle in e-commerce, along with stores being hit with the higher minimum wages. So longer term difficult, but short term I think they look pretty good.
All right, ugly looking chart, but Alchemist wants to know about Signet Jewelers. They have been under pressure. I know they had some ethical issues or the quality issues. I mean, this thing is gone straight down. Once was $150 stock. Any comments on Signet Jewelers?
Steer clear. This is one of the classifications of shopping that I think is still in the disruption phase, meaning that it's moving online. Signet has never done a good job online, and I think that they've got way too much competition coming from everyone from the recently privatized Blue Nile all the way to Amazon.com.
All right. How about Whole Foods? What a move in this thing. And I know Dennis and I are kicking ourselves because we talked about the monthly charts, and it seemed like every time it got to 28 to 29, it was a major buy. Rumors of Amazon. I mean, I'm scratching my head on that one. They've all those years staying away from brick and mortar. Does that make any sense to you? Nice comeback by Whole Foods. Your thoughts on that?
You got to look at the numbers. The numbers are so negative on the comp sales. If you're going to buy in rumors, go ahead and buy in rumors. But there's nothing to like about Whole Foods at this point in time. It looks like they hit a cap on how much they can generate out of the stores. Yes, it's the most in grocery per square foot, but I don't see much upside for them here.
Here's a tough one for you. Andrew Laffensberry's Wayfair, waiting for Amazon to come in and crush them. They had a good earnings report, and then the Amazon, I mean, it went down off this news, but, man, I have enough trouble buying furniture, like when I go in store and look at it. I just don't know how I'm going to do it online. Give me your thoughts on this one. Wayfair.
I think you give it a little time, but you buy the rumor. Amazon's been going hot and heavy on furniture for a while. Yes, they have continued to open additional distribution centers that allow for these oversized items like furniture, but they've been going after it for a while. I think Wayfair has quite a bit of traction within this space. I think they're definitely the best play within e-tail for furniture, and I would wait to see how the market continues to digest this news. It's nothing new, and it shouldn't change the longer-term perspective of mine for Wayfair.
Rocket 1530 from the chat wants to know about Duluth Trading, DLTH. I see the commercials all the time there. What are your thoughts here on Duluth?
They have great commercials.
Yeah, they do have great commercials. I'm not as close to this.
Okay.
They do have fantastic commercials. They do have a great online presence. They do have good wholesale business that's outside of the department stores, meaning they're selling their product outside of the department stores, which is where all that weakness is today. Longer term, I don't really have a perspective on them, but they're definitely a brand that has taken the underwear classification by storm.
Friday, we're going to hear from Foot Locker, and here's a mall retailer here that just continues to perform well. Actually, FL. When you think about all these other stocks that have really been, even some of the shoemakers have really been hit hard. Foot Locker's just been an unbelievable stock. This was a $10 stock in 2010. It's now $74.88 here. FL, thoughts going into Friday's numbers?
I like Foot Locker. I'm a big fan of Foot Locker. I think the underlying numbers, like you said, from the shoemakers have been fantastic. Adidas is the one that's hot, very, very hot right now. So I do like Foot Locker headed into their earnings.
What about Nike? Because Nike has just been sitting here and hanging out for a long time now. If we go to the monthly charts on Nike, it's really gone nowhere for a couple of years. Has this just been a digestion period? Because Nike had a pretty big run in 2012, 2013, and 2014. But the pause here, and obviously we're a little bit off the highs, which was up at $68 here on Nike. Do you think Nike can challenge its highs here once again, anytime here in the near future?
I don't. I think Nike's going through a phase of losing quite a bit of market share. First and foremost, it was to Under Armour. They were focused on Under Armour here domestically, while in Germany, Adidas started taking share in the rest of the world, and now they're hitting home in the U.S. So I do not feel like Nike is a good buy here. I also think it's going to take some considerable time for them to right their ship.
And along those lines, did you bring anything in on Under Armour? I know we were talking Foot Locker and Nike. Any comments on Under Armour?
Stay away. I think they've flooded the offline world in the Burlington, the Rosses. Every conversation I've had with buyers is that they've seen weakness in Under Armour within the stores. I think their shoe strategy is definitely not hitting. Maybe they're going to get some help from Curry in the playoffs, given that game last night. But I just don't think they're not looking good right now. Adidas is definitely killing it.
And let's go to the warehouses, a place I spend a lot of money. Costco. I think we had Chris Versace of Thematic Research, and he said that they get a lot of their revenues from their memberships. And I know I just got my bill from them. And they're expanding stores. Just paid out that night, or going to pay out that $7 dividend. Thoughts on Costco?
Big fan of Costco. Over the course of time that we've spoken about them, they haven't moved much, but they have had that big dividend that you talked about. I still think this is the one name with the strongest moat against Amazon. They've got the strong membership base of which they've increased the cost on that, so they're definitely going to see some dividends there. They've just changed the credit card, which I think is going to pay itself forward quite a bit. The one downside to them is they've kind of dragged their feet on the e-commerce side, but they are looking like they're starting to figure it out by doing partnerships with companies like Shipt so that they can do same-day delivery and next-day delivery. They just got to make sure that they're getting all of their styles and SKUs up on the website so that the customer base has the ability to buy each and everything that they sell. But overall, big fan, and I'm a buyer within the warehouse space, given that they've taken so much share from BJ's and Walmart's Sam's Club.
I know we've covered just about every stock in the retail sector here, but I know you also give just 15 seconds each on Twitter, which has got off the mat. We're talking going for the advertising revenue, and Facebook.
Twitter have been a hater for quite a long time, mainly when Jack Dorsey came back. However, I'm now personally back in it. I think this announcement about what they're doing with Bloomberg and a bunch of other media outlets is bullish for the stock, and I think it's going to give them some momentum to run. Hopefully it's going to translate by next earnings into some additional members. Facebook, there's only two buckets that you can put your money in today. It's Facebook or it's Google. If you're an advertising executive, I am long and strong Facebook, given their breadth of WhatsApp, Facebook, Instagram, etc. They've got 2 billion people that they're talking to every single day.
Ryan Craver, retail expert and senior vice president of emerging brands at Digital and Lombard Group, giving us the best possible look at the retail space. We'll be talking to you again soon, Ryan. Thanks a lot.
Thank you, guys. Have a great week.
All right. We kept Ryan a little on there, Dennis, but man, oh man, does he know the retail space.
Oh, yeah, that's why we always like having Ryan on, especially during retail earnings season, which we are getting into the heart of. Hear from Home Depot, Urban Outfitters, Dick's, TJX all tomorrow. Wednesday, we're going to hear from Target, Al Brands, and American Eagle. Thursday, we're from Salesforce, Baba, Walmart, Gap, Ralph Lauren. Friday, Foot Locker, Deere, Campbell. So lots of retail earnings here coming up. So we'll have to see how they perform.
All right, we covered earnings, we covered ratings.
Let's talk imbalances here, because
Okay.
I was away last week here, and there is some interesting ones. One that's jumping out: General Electric, 661,000 to sell. I think Barron's was dogging it here. I saw it running through my timeline there over the weekend, and GE is not looking pretty on the charts here.
Well, you know what got it on Friday?
What was it?
Deutsche Bank.
Oh yeah, the downgrade.
Hold to
sell.
sell. And
they were challenging whether the dividend was safe.
Yeah.
That's the first I've heard on GE dividend not being safe.
Yeah, I don't know. I mean, I've been bullish to stock since 30, so I just don't want to give a lot.
I've still got it in my investment portfolio. I've had GE in my investment portfolio for about 17 years. One of the first stocks I ever bought when I started investing stocks, and it's still in there.
Man, oh man. I mean, let's see what it's doing today. That was a big move yesterday. I mean, one thing is encouraging. It got under 28, but recovered. The only way, I'll just keep an eye on this thing. Let's see if you get 2, 3, 4 lows. Maybe not at 27.85, but 27.89, 27.90. Maybe see if the institutions even start, ganging up at 28. But it was a big volume day, and I was just surprised to see Deutsche Bank move it that much, and it went down on big volume. So I don't know. You just gotta, I guess, wait for it to stabilize a little bit before you dip your toe in the water. That yield's probably getting up there attractive.
It's 3.42%. So yeah, you can say somewhat attractive here, but again, stock just not out of favor here right now. A lot of these old school, GE not growing huge. They're after growth stocks right now. That's what the market is flying into. And if your growth is suffering, they're taking money out of them. Those are the stocks that are hurting here right now. And GE is just not a growth stock. Yeah. Alibaba here going the opposite way, 147,000 to buy from imbalance land here. This is this an all-time high here for Alibaba?
You bet it is. 120 back in September 2014.
Big breakout here.
Yeah. Uninitiated 2-for-1 stock split when it got under $60 and just quietly.
And everybody hated it in the media down there. You got to watch, that we always say that. Long-term fading that media works. And I wanted to buy it down in the 60s and 70s. For the only reason is because everybody was hating on it. And since then, it's been straight up.
They were ready to put back there when it was trading like 50 or 60. They were ready to put Jack Ma in jail. Remember that? Big accounting issues and everything. But one thing about the Bobster here, and let's see here, May 18th, we're reporting on Thursday here, so just remember that if you're trading. Took a while. It took a few years, but made a new all-time high here. On Friday, nice looking chart there in Alibaba. Just keep an eye on that 120 level. All right, Spencer, 859 here. You want to wrap things up?
Sure will do. We're looking ahead to tomorrow's show. It is Tuesday, so we're going to be joined by Nick Shaheen, our options expert. Also going to have Mark Chaikin on. Before that, I met with Mark on Wednesday there in New York for about, again, an hour and a half. We had a nice little talk. Mark was at the Benzinga FinTech Awards, and his company, Chaikin Analytics, won an award. So we're going to talk to him about that, and I believe he's launching something new. I'm not sure if I'm allowed to say it yet. Maybe we'll wait till tomorrow for him to announce it there. But that's our show for tomorrow. Hope you enjoyed our show today. Hope you enjoyed our talk with Ryan and his thoughts on the retail space. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. We want to remind you to check out Benzinga Pro. It's Benzinga's real-time news platform. If you want to stay on top of what's going on in the markets, to get a free 2-week trial today, go to pro.benzinga.com. If you want a demo or you want to learn more, you can email me, spencerisrael@benzinga.com, and I will hook that up for you. That's it for us. Have a good rest of the day. We'll see you folks on Tuesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.